Welcome, everyone, to a very special show. We don't quite have a name for it. Pain flows, pain points, and capital flows. We're working on the name, but it's going to be a show with Daniel Want and myself, Emil Kalinowski. We're going to be talking to very interesting people, experts in their field, about a particular market and what that market might be saying about the broader whole of the system, about the global economy, about currencies, commodities. Daniel, how have I done so far in explaining sort of the outline of each particular show?
Yeah, no, absolutely. I mean, everything is interrelated, everything's interdependent. And so, trying to gain deeper insight into certain markets, platinum in this case, I think will be quite fascinating just to sort of, so see where we're at with things and also have the ability to talk to an expert and someone with a lot greater depth of insight into the underlying realities of what's going on. And then triangulating that back with some of the different sort of perspectives that we also have, just trying to make sense of things and explore forward-looking scenarios and what might be in the price, not in the price, et cetera, et cetera. Yeah, I think it'll be interesting.
It will be very interesting. And our inaugural guest is Wilma Swarts, the director of Precious Group Metals for Metals Focus. Vilma, welcome to the show. Can you tell us a little bit about your background, and then we'll jump right into platinum?
Excellent. Well, thank you very much for having me, both Emil and Daniel. I'm very excited to tell you a little bit more about what has been a passion for me for most probably the last 14 years of my life. So as you can hear from the accent, I'm South African. And there's a particular correlation there because most of the world's platinum actually comes from South Africa. I come from the mining industry. I worked for the third largest platinum mine in the world. And I looked after the metal flow, so metal flowing into the business, being processed, and also the metal, so physical metal flows out of the business, placed into the market. So I have an intimate interest in both the supply side, the mining side, and also the secondary side of material production, and then quite an interest in the demand side. I served on the Prerequisite board. It's a Japanese company that produces product with using platinum group metals, and I also served on the Platinum Jewelry Development Association board, as well as the World Platinum Investment Council.
Fantastic, very impressive. We've got the right person. Now, ladies and gentlemen, we are going to talk to Vilma about the ABCs and 1, 2, 3s, just so that we are on a level playing field, at least somewhere, a foundation to start about where does the platinum come from, where is it refined, who uses it, which countries, and then from there, after that sort of introductory monologue, soliloquy, we'll go to Daniel. And Daniel, of course, is the Chief Investment Officer of Prerequisite Capital. And if you have ever seen Daniel speak on Real Vision or any of his other number of appearances around on the internet and podcasts, you know that he has a very unique proprietary view into capital flows, which is, I would think, the elemental, fundamental mover of prices and markets, capital flow. So we'll be looking at some of the charts that Daniel has, some of the ideas, some of the questions that he has. And Daniel, of course, you picked out this market because you found something interesting. We have all manner of markets that we could be looking at, but we picked out platinum because you thought there was something interesting in that market. But let me throw it to Vilma first. You said it's South Africa, but tell us, where does platinum come from? Is it mostly South Africa, generally South Africa? Where else?
Yes, definitely. So I think what is important when we talk about platinum is to understand that when you introduced me, you said platinum group metals, and that is an important element to remember. Predominantly, platinum does come from South Africa, but it is mined as part of a basket of 6 metals. And most recently, what we have seen is actually that platinum for the miners actually only contributes about 19% to their revenue. There is palladium and rhodium that has actually contributed quite significantly to the incredible basket prices. but I run ahead of myself. So let's start with platinum group metals and where it comes from. So resources and reserves of platinum far less than what you would see in the gold market. So compared to gold, there's about only 1 to 5, so for every 5 tons of gold, there's only 1 ton of platinum in the world. 72% of platinum is mined in South Africa. So 72% of supply. There is then metal that comes from Russia. Around about 10 to 12% of platinum is mined as a bi-metal. In South Africa, the mining is for platinum group metals. So you have platinum or platinum group metal mines in South Africa. In the likes of Russia, this is a byproduct. And so the focus there is mining nickel coppers, and the byproduct is platinum, palladium. More palladium from Russia than platinum. Also North America and Zimbabwe. So Zimbabwe has incredibly big resources of platinum, but at the moment it only contributes about 8%. Then we have North America, so with the likes of Stillwater, and of course, in Canada, we have Impala Platinum, where there's also a certain percentage. Very little platinum group metals come from other regions as mined material. Over the years, because so much of the platinum goes onto automotive catalysis, so the dominant demand segment for platinum is the automotive sector. So one uses platinum to convert monoxide to dioxide, so taking it from a poisonous gas to a greenhouse gas. But of course, that is the predominant use of platinum. And because of the fact that it started being used in the 1970s already, we are now seeing vehicles come to end of life, that those vehicles are recycled, or the spent catalysts are recycled. And so we are seeing a growing percentage of secondary material coming to the market. So geographically, platinum mine supply is very concentrated. About 4.2 million ounces come from South Africa, and there's about 6.2 million ounces mined on an annual basis. From a recycling perspective, so from a secondary supply perspective, that is a lot more diverse, because that is associated with where the vehicle is actually comes to end of life. The other large demand component for platinum is jewelry. And the largest market for jewelry is China. So if we just think about the quantum here, around about just short of 2 million ounces of platinum is consumed in the jewelry market. 50% of that is consumed in the Chinese market. And then if we look at how the Chinese market operates, you would buy a piece of platinum and then you would trade it up potentially, or if you want to change it out. So there's a fairly large jewelry recycling component. Still kind of small in comparison. So we have about 1.5 million ounces of recycling, of platinum recycling in the autocat space, the autocatalyst space. And you have about 400,000 ounces of platinum that comes from the jewelry sector as recycling. So that is a growing component. So if we think about, in the year 2010, that was it contributed about 26% of supply came from the secondary market. And that we see growing going forward to making up about 35% if we look at towards the end of this decade. That takes care really of supply side of the ABCs of platinum, and a little bit of the demand side. But platinum has an incredibly diverse application compared to some of the other metals. So its sister metals, palladium and rhodium, 80 to 90% of that is consumed in the automotive market. But yes.
Can I jump in very quickly before we move on to demand? Because you're going to move on to demand, is that right?
That's correct.
Perfect. Let me ask a few questions about supply. Let me just get in there, because in other areas like, I'm thinking, what am I thinking of? Cobalt, for example. A lot of the mine supply also is coming from Africa, the DRC. And that's one choke point, and sounds similar to South Africa, where the lion's share is coming from one country. But then there's a second choke point in that cobalt ore is then shipped to China and refined there. Is there anything at all similar in the platinum market? You mentioned South Africa. Tell me if I've got these numbers right. 3/4 of mine supply. Russia, 1/10 of mine supply, roughly. And then we've got Zimbabwe around 8%. Are there then further choke points in refining, especially, I suppose, and then I suppose that wouldn't be the case when it comes to the recycling of the cars, but maybe in the jewelry, which mostly is in China. So tell me a little bit about the refining side. Are there any choke points there?
Oh, I think over time there definitely is. But so if we just think about South Africa, there are three integrated, what we call integrated miners there. That means that they go from hoisting the ore straight through to actually producing a final product. And the other mines in South Africa would make a concentrate, and that concentrate would be tolled or processed by these three integrated entities. Some of that concentrate could also potentially move to refiners elsewhere, so offshore. On the recycling side, and we know that in 2019 we did have a choke point, so there was a lot more material that was coming through and the refining capacity wasn't there. But that would be situational. That would mean because if we just think about the process of mining, so platinum production, you have the concentrate goes to a base metals refinery. You spoke about cobalt there. So there's not a lot of cobalt. There's some cobalt in the deposit. But certainly there's nickel and copper. So the process for platinum production is that it goes to a base metals refinery to extract the nickel and the coppers, and then it goes to your precious metals refinery, where it then is taken to a final product. Before it goes to the base metal refinery, there's smelting that happens, and that is frequently a bottleneck. I think that's really where we see sometimes challenges.
Is the smelting and or refining capacity concentrated in one country, like as is the case with cobalt refining and for battery metals, which is predominantly in China? Do we have anything like that in platinum, or no, is it widely dispersed?
For mine supply, for concentrate, it certainly is concentrated in South Africa. Okay. But each jurisdiction, each geography would have a certain amount of smelting capacity, a certain amount of refining capacity. So typically in North America, you have Stillwater would have its own smelting capacity, and then refining as well. There is sufficient refining capacity. It happens that in North America, the model there is predominantly to do own smelting, and then to have a refiner that can do both primary and secondary material, refine that to a final product. In Europe, you also have refineries that are capable of taking in mine concentrate feed, and also secondary concentrate. But in general, smelting is generally the bottleneck when it comes to material supply.
Okay, so about 3/4 of supply comes from mines, but that's going to be reducing. By the end of the decade, we're looking at maybe 1/3 or more coming from secondary sources, which is primarily from cars, which are distributed all around the world. Very well. Because of when we're recording this, 2022, of course, what's in the news is the war between Russia and the Ukraine. And I know that recently in the news, Palladium showed up in the news, because if I'm correct, you can tell us, a super majority of palladium comes from Russia. And so I believe it was the London Platinum Palladium Association said, we don't like your Russian palladium anymore, and we're not going to be accepting it. Tell me if I've got that story generally correct. But the point The reason I'm asking is if 10 to 12% of mine supply comes from Russia, is there any talk right now about accepting platinum from Russia?
Well, both platinum and palladium will have been removed from the good delivery list, but we need to think about what that really essentially means. The London Platinum Palladium Association was formed in order to allow or facilitate banks and consumers to have a trust mechanism. So you understand that the material that you are buying is good delivery status. So how it is mined, how it is sourced, and what the purity levels are is of a certain standard. And so what has happened is that there are two refineries, Russian refineries, that have been removed from the good delivery list. Metal up until the 8th of April will be accepted as good delivery standard, and metal beyond that will no longer be accepted. So there is a component of that where banks or the futures market, and Daniel might most probably give a little bit more insight of that, but you place physical metal into warehouses. That metal needs to be of a certain standard. It needs to have that accreditation. If it doesn't have that accreditation, then it can't move into that. So that could create some form of access liquidity squeeze on physical metal per se. But the refiners can continue, so these Russian refiners can continue to produce the metal, can continue to place it with consumers who are willing to purchase the metal. None of these companies are particularly on the sanctions lists, so they have the ability to continue to trade. It would depend on, I think the country position and the company's position within the country and their own internal policies as to whether they would continue to buy or not buy. But will that reduce the amount of metal potentially available? I think on the physical market within the financial markets, potentially, but as a top line supply and demand, no.
Daniel, that's it from me when it comes to supply. Did you have any questions? Otherwise, we'll move on to demand.
Not necessarily. I mean, like two of the biggest aspects from the outside looking in naively, obviously the jurisdictional risk and the likely course of events, particularly in South Africa, have always intrigued me, especially, over the better part of the last 10 years, watching things evolve. A lot of the lessons of history that I think I've learned have continued to just point to more and more instability and issues and lack of reliability of basically contracts. So the time horizon of confidence has been collapsing for quite a while. Trust mechanisms, expropriation risk is just gradually sort of escalating in the background, either through taxation or like all sorts of different ways of interrupting activity. Obviously, you would understand this or a lot of these dynamics a lot more than I ever will, given your background. Is there anything in particular in terms of, so one of the things we tend to find is that insight into the present and how we've got up to here tends to give rise a little bit to a degree of foresight. Not always, but sometimes. And so from a jurisdictional sort of progression in some of these sorts of things, do you have any particular sort of forward-looking views or scenarios or thoughts or insights that you find are interesting that could or may not actually, impact the supply situation moving forward, or not sure?
Sure, yeah. I mean, I think you're 100% right. So this geographic concentration of platinum does make it a metal that people are, or the guys in white coats make hesitant to necessarily use. So there's always a wish or an aspiration to find to use less of it or not to use it at all. The reality is that these metals are, incredible in terms of their characteristics. So one would always need the metal. But if we look at South Africa first in terms of geographic and social political risk, that is true. You're 100% right. There's another dynamic there, and that is, just power supply. We talk about the smelters. We all know that this is energy intensive mechanisms, and so I think the miners are incredibly vulnerable to the utilities provider and the stability of the utilities provider. And we've heard, most probably you've heard about load shedding, and that is really a key challenge, and it does hamper production in the near term. The other component really is industrial action. We did see in 2014 that mines were shut for 6 months. And so I believe that there is a lot of work and effort that is going into that relationship with the unions. But, just in terms of the socio-political geographic makeup of South Africa, the mining industry is vulnerable to potential industrial action. Now, that is a bit of a 3-year cycle. So we tend to see that negotiations happen in 3-year cycles. And so imminently, there is negotiations, and you would have seen some news flows around the negotiations around wage increases. And so typically you can see that going forward, that will continue to be a pinch point for platinum and platinum supply from South Africa. In addition to that, I think that, the mining of reserves are becoming deeper. We are seeing some depletion happening on the Western Limb. So the cost of mining is increasing, and the inflationary cost. And so if we look long term, the growth prospects in South Africa is a challenge in terms of mine supply. So while we are seeing quite a healthy growth, we're expecting healthy growth in secondary supply. I think long term, we're seeing about 1-2% growth prospects in primary mine supply.
Vilma, it just occurred to me to ask you about stockpiles, because in some of these smaller metal markets, unknown, unreported stockpiles of the metal can have an outsized influence. Gold famously has, if I'm going off memory, but I think $8 trillion worth of above ground stock, and all the new supply that comes on each year is only 1 to 2% of the above ground stock. Silver, if I'm going off memory, is about 3 billion troy ounces, 2/3 of which are unreported and estimated. So there's this tremendous pool that can come in at any time at the right price, I suppose. What about with platinum? Are there perhaps strategic stockpiles by the government, by Russia, South Africa? Are there strategic stockpiles? Maybe producers or commodity traders? Is it material? Is it publicly known relative to the size of the market? Is this something that we should consider? Or is the real stockpile all the cars that are being driven around? That's the real stockpile.
Well, it's all of the above in a way, and I guess there's no clear definitive answer if to say I know exactly what those stockpiles are, but we do estimate the stockpiles. So we have an estimation of what above ground stock is, and so for platinum, we see that by the end of 2021 there was about 10.5 million ounces worth of metal in above ground stock. That represents about 17 months worth of demand. So essentially, if you think about it, if no production happens, if no secondary supplies happens, for about just short of a year and a half, you could technically have metal that you can draw from on above ground stock. Beyond that, if you don't have the supply, you would have a challenge. Now, that number in itself is potentially problematic because, not all metal will come to market. For platinum, I think that there is comfort, and there's also comfort for, in terms of of knowing that that's the kind of above ground stock number will incentivize or drive a consumer to continue to use and develop product associated with that. So it's not necessarily a negative. Sometimes it's a negative on the price, and Daniel can most probably talk a little bit more about that in terms of the investment appetite around that if you know that there is stock. But if we just look at the ETF holdings, they actually peaked last year at 4 million ounces. And essentially, that metal at some point would come back to market. So that is, in a way, metal that is accessible, and there's 4 million ounces. Producers, OEMs, so automotive companies, would typically hold 60 to 90 days worth of metal in inventory. And similarly, so if we just look at, and I know we're not on demand yet, but if we look at some of the other applications like glass and chemical, typically there would also be metal available and held in stock there. And again, we're looking at about 2 to 3 months worth of stock.
Well, let's get to demand then. We've been talking about supply long enough. Tell us a little bit about demand. You told us it has something to do with primarily vehicles, auto catalysts, jewelry, and you just mentioned glass. Give us the ABC 1, 2, 3 about platinum demand.
Right. So when we talk about auto catalysts as being the largest demand component, certainly the operative word is catalyst, because it is also used in other industries as a catalyst. So it is used in chemicals, in making plastics, in vinyl acetate monomers. All of those processes would use platinum as a catalyst. And so you have a certain amount of installed capacity, and we've seen quite a significant expansion, especially in terms of the manufacturing of plastics in China. It's also used as a catalyst in the pharmaceutical industry, and it is used as a catalyst in the petroleum industry. Those are somewhat smaller components, so you're looking at about 10%, 5% of total demand that these components make up: the chemical side, the petroleum side. In glass, it's not used as a catalyst. In glass, it is part of the equipment. Because of its incredibly high temperature resistance to high temperatures, it is an ideal metal to use in glass. It's used in combination with rhodium, typically, in the equipment in order to make fiberglass and glass. So again, last year we saw incredible expansion, and in a way that was a delay from 2020, where because of COVID the expansion didn't happen. So we saw quite a bit of metal. We saw 715,000 ounces consumed in 2021 in the glass industry, new glass application. So if we just think about it again, there's a lot of platinum installed in the glass industry. And the metal that we talk about as demand is only top-up metal. The other industrial, and this is a growing element, and this is possibly where we see a lot of optimism, is the hydrogen economy. And we classify that within other industrial components. So the use of platinum in electrolysis, so making of hydrogen. There are different technologies that you can use to make hydrogen in electrolysis, but there is called proton exchange membrane technology that uses platinum. And looking at energy security and looking at the importance of net zero, we are seeing that there's a lot of potential for platinum consumption in the hydrogen economy, in the production side, then also in the consumption side on fuel cells. So looking at potentially shifting to net zero NEV vehicles, so vehicles that have a net zero footprint. So we're seeing some move away from industrial combustion engines through to zero emission vehicles. That's the word I was looking for. Zero emission vehicles. And platinum, so we know you spoke about cobalt and the importance in the battery electric space, but Platinum plays a role in the fuel cell vehicle, which is also a zero emissions vehicle. There are many smaller other applications like medical, so so in pacemakers, in stents, and also in cancer treatment medication. There's also platinum used in those. So overall, there's a really diverse consumption. I would say, as I say, about 60% of it goes into catalysis. Then we've got a further 20% goes into jewelry. And then you've got the other components making up the rest of the 20%.
You know what we didn't mention, what you didn't mention, investment. Precious metals, whenever anyone talks about precious metals, they think of adornment, jewelry, but of course also as an investment wealth preservation. That's the case with gold, silver. You didn't mention it at all with platinum. I'm guessing that means there's very little platinum bar holding or platinum coin collecting. Is that the case?
No, not at all. I think there is quite a bit of platinum bar and coin holding, and in fact, last year was quite substantial, and the year before that even more so. So typically, the behavior in the coin and bar market, retail. So we talk about it as retail investment because, of course, there is also the ETFs where there's a physical underpin to that, which we don't include in our demand specifically, but acknowledge as an important component in terms of platinum. But so we saw quite a significant increase in platinum retail investment bars and coins in 2020, behaving similar to gold. So we typically see that when there is an increase and a shift towards safe haven holdings, then platinum would benefit from that. So we saw just short of 580,000 ounces go into retail investment bars and coins in 2020, coming off slightly in 2021 to about 330,000 ounces. But that is still substantial, if we just look at on average, that we have seen that be about 300,000 ounces of demand.
What proportion of the pie chart of the total demand, annual total demand, would investment be? If we've got 60% auto catalyst, 20% jewelry, and then remaining percent is other petroleum, chemical, glass, where does investment fit in?
As far as physical metal is concerned, it is a quite a small proportion. So if you look at total demand, it is 7.3 million ounces. And if we look at so 332,000 ounces, that makes about 4%.
Perfect. Okay, good. Daniel, if you have any questions, jump in. If not, I've got a question about the auto catalysts and the sister metal, it's definitely the sister metal, Palladium, named after Athena, Pallas Athena. Now, I know that there has been, if I remember correctly, platinum is primarily used as auto catalyst in, I don't even want to say primarily, but there's a heavy component used in diesel-powered engines, whereas the gasoline petrol is more palladium-based auto catalysts. And in recent years, I don't know, let's say last decade, there was growth in the palladium demand from this segment. But then we had the scandal, the Volkswagen scandal in Europe, and Europe said it turned out, well, this diesel-based powered engine is not as green as before. And so if I remember correctly, there was much less platinum demand going forward. But there's a price point at which point the relationship between palladium and platinum is so out of balance that the original equipment manufacturers say, we can't afford using palladium. It's through the roof. Why don't we re-engineer the auto catalyst, use platinum? And I believe something like this happened in 2000, 2001, especially right now with all the price spikes on palladium because of the Russian embargo. What are we seeing right now from the original equipment manufacturers, the vehicle industry? Are we anywhere near that sort of price point? Are we already transitioning to more platinum instead of palladium demand?
Yeah, I mean, I think that that is exactly right. So essentially, you've kind of really captured it incredibly well around, the fact that that diesel engines use a lot more platinum, and gasoline vehicles use a lot more palladium. But with this increasing palladium prices, and also just simply that palladium was in structural deficit. So in our data series, it's been in structural deficit for the last 10 years. And so fundamentally, there is a challenge around using too much palladium, and this is the reason why we had seen the prices go to where it did go. So we know that in 2016 there was in the news flows an announcement about the efforts to look at substituting palladium for platinum, so replacing some of the palladium with platinum. And of course, it's not always as transparent. There are a couple of things. So we have different views around the substitution, the extent of substitution. Our understanding is, and based on our research, we do know that it is taking place. So there are certain OEMs that have said, well, I don't want to be exposed overly to the risk of one particular metal. And they are using what we call a trimetal catalyst that has more platinum on it than it had before. So within the gasoline engine. So during the previous decade, we did see a lot of shift away from platinum to palladium, even in diesel catalysis. And that is an easy switch back, because diesel, just in terms of how the engine is structured and that it has a cold start, and platinum being more affected at colder temperatures compared to palladium that needs the engine to be at a higher temperature to be as effective, you had that. It's a natural switch. So how much of the reversal back, because there is still a lot of diesel cars out there. Yes, European market is reducing quite substantially, and we've seen that the diesel share in the passenger segment has dropped to below 20% in recent years, down from about 56%, in 2010, there or thereabouts. But as far as palladium is concerned, we are, so in the gasoline or vehicle, we are seeing an increasing amount of platinum being used in the gasoline engine. The detail, it varies. So in our estimation, we believe that in 2022, about 400,000 ounces worth of palladium will be replaced with platinum, and that could increase. But there's an inflection point there as well, I would say. So we would certainly see that there's an increase out to 2025, where it potentially could plateau, because we will see that palladium or we're expecting the palladium and the platinum prices to converge.
Yeah, no, that's very good. We might just launch straight into some of the questions and things I would love to ask and get into. My perspective, like I sort of hinted at earlier on in the conversation, is that I spent a lot of time looking at the big picture of things, how everything fits together, looking at the world as an interrelated sort of complex system. At the same time, I spend a lot of time trying to understand the behavior of different participant groups within that system, right? Because different groups of people or organizations have different proximity to information. On the one hand, they have different incentive structures, they have different levels of sophistication and experience. And it's kind of a philosophy of, I'm not too interested in listening to what you say. I want to see what you're actually doing. So what actions are you taking? Where are you putting your money and why? Where's the money moving? How's the money moving around the world, et cetera, et cetera. And when we do that, especially because different participant groups have different behavioral relationships to a normal cycle, or an economic cycle or a market cycle, depending what we're looking at. And by watching what different participant groups are doing, we can, in aggregate, we can start to reverse engineer where we might be in that cycle for that metal or that currency or that commodity, et cetera, et cetera. One of the reasons why I was really interested in talking about platinum in particular is when I sit back and look at this constellation of aggregated participant group behavior, I'm seeing a setup that is very similar to the 1990s, right, in platinum. And what I mean by that, like currently for the last 6 years in particular, we've had, like by our measures, underlying liquidity in and around platinum related markets, whether it's futures or the different areas that it's traded, has been very poor, very lacking. It's very much been quite devastated. Almost zero, next to no speculative interest, right, for the better part of the last 6 years. From especially when we look at the different sort of participant groups and flows underneath the futures markets. But where it gets interesting is when I look at the behavior of patient capital or patient type participant groups. So just to backtrack really quickly, we tend to categorize participant groups by proximity to information, experience, sophistication, but also motive, right? And so that enables us to aggregate lots of different entities and people. And so when I talk about patient capital, they usually have good proximity to information at a fundamental level in any given, whatever the market is that we're talking about. They have multi-year, long-term sort of cyclical time horizons. They tend to have a bit of a concept of fair value to some degree. So if price gets too low, that will incentivize them to accumulate at the margin. Or if price is too high, they're distributing at the margin. And so the thing that interests me the most is that I'm seeing basically almost like a rerun of the 1990s, right? Where a lot of this patient money crowd, their aggregate behavior has been very substantial accumulation over the last 6 years in particular. And the last time we saw that was in particularly the late 1990s, right? And we had similar conditions where it was just zero speculative interest. Underlying liquidity was very lethargic. And another way of thinking about underlying liquidity or market book depth underlying any given market, it's almost like if we've got the globalized system as a complex system, what interest does that broader system have in this particular market, right? If there's greater interest in this market, there'll be generally greater levels of liquidity, order book depth and interest basically underneath that particular market. And so underlying liquidity tends to be a bit of a leading or coincident type indicator. And so when you line it up with price, a very healthy market is a very liquid market, right? It has huge order book depth, lots of interest from that broader system. And this is very separate to some of the participant group behaviors that we're talking about as well. And so recently, and especially even in the last 6 months, underlying liquidity has just been falling away, right? There's almost no interest. The bounce that we've had in platinum prices over the last 6 to 9 months, incredibly weak, very lethargic. And in fact, when we start to look at our credit risk models for that broader sector and a lot of the, related equities that sort of have like mining and different sort of exposures to this sector, they've actually been pretty healthy in terms of their fundamental condition and a lack of credit risk priced into their operations. And so that's a pretty good sort of fundamental picture, at least on a sub-cycle 2 to 4 year basis. Over the last 2 years in particular, but that's shifting now to going from complacency in terms of credit risk, shifting in the direction of escalating credit risk, starting to be priced into those companies. So it's a deteriorating at the margin fundamental condition in those companies and things. And so my suspicion is, because a lot of our leading indicators of economic growth and demand in the world at the bigger picture level is for the path of least resistance, at least for the rest of this year, to be towards disappointment. So declining and decelerating demand and economic growth conditions in the world more generally. And that would tend to match the very lethargic liquidity conditions that are unfolding. But what I'm seeing, and this patient money crowd for the last 6 years have been accumulating very strongly every time the price of platinum, so using the futures markets in the States as a point of reference, every time it heads towards 800, we see massive accumulation. And we're kind of already inching in that direction already, right? So my suspicion is we're towards the end of a bottoming process, 6 years in the making in platinum, very similar to the late 1990s, amazingly similar. And I was very fascinated at your observation or your point around the palladium platinum substitution, because it all shifted in that, obviously, the early 2000s, where we seem to be building towards a similar setup there, because we also, simultaneous to this, there's weakness coming in underneath the palladium markets, right? They've been distributed, and the underlying liquidity and broader interest of the broader system has just been very lethargic. It's a very weak picture there. It's more of a picture of a topping process more than anything, whereas platinum is the exact opposite. And so then when I sit back, and especially just further confirmed by a lot of what you've been describing, Wilma, we've got basically security of supply, potential issues continuing to build in the background around platinum. We have, both in South Africa, but obviously also the Russia connection as well. But we have more broadly, on a multi-decade basis, a lot of our leading indicators of sovereign credit risk in the world have been increasing, which generally means there's an increased demand for collateral. And so at the margin, what that tells me is the next 7 years, it's likely to be an outsized marginal demand from jewelry and investment demand for platinum, especially when you marry that with security of supply issues because of geopolitical or jurisdictional risk concerns building. Obviously, we have this, we're potentially getting to a point just like the early 2000s, because the setup is so similar to the late 90s, where we could at the margin have a meaningful shift towards some substitution from palladium to platinum, just like you guys just discussed a little earlier. The other suspicion I have, and Wilma, you can probably speak to this, when it comes to platinum, so what we've just seen over the last 10 to 15 years, in particular in energy, right, is we've seen the ESG craze really get fashionable and hyper fashionable in the political world and in the investment world, and et cetera, et cetera. We've also seen in the energy space, for a variety of different reasons, a complete washout in CapEx and new discoveries even in the energy space and all of this sort of stuff. So it's a very capital scarce condition in energy. Now, my suspicion is, and just looking around at the way, flows and different behavior, participant behavior groups have been behaving around platinum, my suspicion is that there's been a similar dynamic where the baby's been thrown out with the bathwater around the ESG concerns, security of supply issues with the, South Africa often popping into the headlines over the last 7 to 10 years. This all sort of coalesces into this setup from a forward-looking investment point of view over the next 10 years of potentially, obviously it won't be the same as the early 2000s, but similar, because of supply restriction. And so proximately speaking, looking through all of these different factors, it kind of superficially makes sense to me that we would get this, substantial patient money crowd accumulation over the last 6 years in this space, because the next 7 years could be amazingly attractive and appreciatory for platinum prices. And my suspicion is that over the balance of this year, just given the constellation and the weak construct in flows and liquidity and different things, and also, broader things, my suspicion is we have another accumulation opportunity in platinum and platinum-related investment themes, etc. So we sort of get a little bit more weakness before we start to step into all of these dynamics flipping on its head to potentially a very strong next 7 years for all of these different reasons that I think are starting to coalesce in these directions. Now, I've probably talked way too long. What are your first impressions, actually both of you, when I make these observations, especially the analogy to the 1990s and the late 1990s in particular?
I think cyclicality, we know that, I mean, I think that that's really true, that these commodities operate in cycles, and you're seeing very similar aspects to the 1990s. So it does make a lot of sense for me that, platinum is shifting into that potentially more optimistically investment phase, as opposed to palladium, where you potentially are seeing that, just given battery electrification, and the potential for substitution, and the hydrogen economy, which it doesn't have a play in at this moment in time, certainly seeing that there's that shift between the two, the palladium. So what you're seeing in the investment markets in terms of the depth of the order books, etc., certainly I think that is very true.
Vilma, very quickly, maybe our audience thinks that we are whistling past the graveyard with platinum because 3/5 of demand goes towards auto catalysts, which are unnecessary in electric vehicles, which is the whole environment, social governance movement that Daniel mentioned. But I don't believe that we are getting rid of all those ICE engines, internal combustion engines. Is that correct? What do the projections that you see at Metals Focus? Is it that we're substituting all the vehicles by 2030, or it's more of a 2050 story, or there's still going to be plenty of demand? Tell us a little bit about what the pace is and whether or not there's some sort of serious demand destruction that's taking place, or is that more of a smoke and not a lot of fire behind that?
I mean,
fear?
I think we shouldn't dismiss the fact that there is demand destruction in platinum from the auto sector side. I think what we've got to acknowledge as well is that there will be some replacements, so there will be growth in new applications, and that it still remains within the transport sector, but it would be associated with the hydrogen economy. So just maybe taking a step back and looking at where we're seeing the powertrain go. So essentially for most of the previous century, we saw this massive growth in the internal combustion engine. And the question is the internal combustion engine the horse of the turn of the previous century? And I think not immediately, no. I think that it's also important for the audience to understand that, when you talk about a battery electric vehicle, there will be different forms of battery electric vehicles. And for the next decade, we're going to see a lot of hybridization. And that hybridization includes an internal combustion engine, a smaller engine. But in terms of platinum consumption, it's actually neutral to positive, because you actually need cold start circumstances, etc. So you actually need more PGMs, platinum group metals, on the catalyst system in a hybrid vehicle. And so if we just look at the share, and this is what the headlines would say, battery electrification will make up 50% by 2030 and 100% by 2050. And if you unpack that, true battery vehicles that have no internal combustion engine will make about, I would say, based on our estimations, around about 20-25% by the end of the decade, potentially more. And there are certain constraints associated with that. The expansion of the grid, the capability, just the access to base metals, the nickel, the class 1 nickel, the lithium, those. And I'm not an expert there, Emil. So certainly we know that there will be some constraints. But I think it's quite important to understand that for at least the next 20 years, the internal combustion engine, maybe not in pure internal combustion engine shape and form, will be part of the powertrain that drives people in their cars, but it will be a substantial percentage. And out to this end of this decade, we're forecasting that internal combustion engines will still make up about 80% of vehicle production.
It just sounds the parallel to, everyone say trying to move away from fossil fuels, all of their noble intentions and all the rest of it into renewables, et cetera, sounds fantastic. But there's this, over the next 7 years, especially because of this CapEx issue and all the rest of it, we're staring down the barrel of a bit of a timing sequencing issue in terms of all of, trying to head in all of these different directions, because we still are just hyper dependent on all of these other modes of energy production. And so my suspicion is, and it's sort of clearly I'm going to have to look into all of this a lot more, because it seems like quite an opportunity here, broadly speaking. But my suspicion is a similar dynamic has happened with platinum, where we are likely to see increased demand from a variety of different sources over the next 5 years, partially from, everyone getting ahead of themselves, even on the ESG related aspects as well. Yeah, anyway, I'm thinking out loud here. I find this fascinating, especially because it's adding a lot of detail to what I think I am perceiving around this market.
Vilma, Daniel, we were just talking about capital expenditure. Earlier, Daniel mentioned the number 800 in US dollars as a point of accumulation. Daniel, let me know if I've got that right. By the patient money crowd, patient investors, long-term investors. Does that number ring a bell in any sort of way in the fundamental space? Does this have anything to do with all-in sustaining costs? How much does it, does that number 800 show up anywhere on your fundamental radar screen for, I'm guessing, supply?
Well, it's actually 750 to 800 is where it's been accumulated repeatedly. And that seems to be a pretty critical point. So if we go below there, then we're in crash mode, basically. If we go below 750, then we've got a lot of participants that are trapped, and they will need to reverse and get out. But yeah, that is not my primary view. I kind of think even if we do go below it, we'll bounce straight back up just like we did in 2020, because it'll just be accumulated hand over fist. And the fundamentals are pretty good from what I can tell, even at and around those prices, quite frankly, which is actually similar to the 90s, where a lot of these mining related companies and equities had pretty healthy fundamentals, even at prices around 400-ish for the better part of the 90s, and we have a fairly similar picture there as well, even though over the next 12 months, they're probably going to deteriorate, but overall, it's pretty good.
So last year, so 2020, the all-in sustaining cost of production was around $496. And this year, most probably will be 2021 will be similar levels. 2022, I think we need to expect some inflationary costs. I think that there have been quite a couple of challenges. Firstly, because of the basket price where it is, you are going to see higher wage costs, just the escalation in utilities costs, the cost, there was a supply chain squeeze in terms of equipment, just reagents in the entire mining process. So mining inflation, I'm expecting to be a bit higher, but so I think we can expect a higher all-in sustaining cost. But in reality, given where the palladium price is and given where the rhodium price is, as I was saying earlier, platinum from a revenue basis in the second half of 2021 only contributed 19% to revenue. The big hitters was rhodium and palladium. Now, if you see that come off, that will be a risk. But at the moment, production, they're all in the money. That means that production will continue. The moment you see that the prices come off, if the palladium price comes off quite a bit, if that basket price that they can earn falls below a certain level, then you are going to see, more caution around mine expansions, around, just simply both greenfield and brownfield expansion. And that could mean that you're seeing a lower mine supply.
Daniel, I wonder if you had access, I'm sure you don't have it handy right now, but I wonder if there was some sort of look, you could see into the palladium market, the rhodium market, and then I don't know how you would do it, but some sort of weighted basket of those three to give you a price point as to whether that would explain the 750 to 800 importance in palladium. I'm talking out loud as well. I have no idea.
Yeah, the 750 to 800 is more from a investment point of view. Now, everything you just explained there makes a lot of sense. And even if the all-in costs of, for platinum, like I have no idea the volatility of that. But even if it went to say 500 or even a bit north of that, that's still fine and that's fairly consistent. And this is what I was kind of saying about the credit risk model being reasonably healthy. And if they've got, if we're at current prices, and even if we go down to 750, 700, whatever, we will see further, credit risk starting to come into those securities or those related to those operations and companies. But it's not really that big a deal. And if we can even tolerate some inflation or cost inflation to, 500 or a bit north of 500, then there's plenty of buffer there. And that would also still be very consistent with why it's being accumulated massively. In terms of, I have Palladium sitting here in front of me as well. The underlying liquidity on every one of these spikes that we've seen over the last 3 years in Palladium have been deteriorating each time. And currently, even though we've got recent new price highs in Palladium, the underlying liquidity has been much lower and it's falling away pretty fast, actually. Even the speculative money crowd have started to, become lethargic as well. But over the last couple of spikes, over the last 3 years, it's been distributed pretty heavily by patient money. There's more credit risk being priced into Palladium-related operations than platinum. Right. So for whatever reason right now, it appears like there's better margins in platinum than there is even in Palladium. I don't understand this. I don't know whether that is accurate or not. But there's a bit more credit risk coming into Palladium now than, from fairly healthy conditions than there was platinum. Like overall, I expect the relative ratio of price of Palladium versus platinum. So Palladium will underperform and platinum will outperform probably over the next 3 to 4 years is what this setup looks like. And it's pretty concerning that underlying liquidity and broader interest in Palladium is so poor. We have a point of control from the real money crowd at about 1,700 on Palladium. Yeah, if that gives way, then there's potentially quite a big unwind there because that roughly bullish crowd have been in control literally for the last 11, 10 years, right? And so that's a huge dam buildup of potential energy. So if 1,700 were to give way in earnest in price, then we have a lot of trapped participants and quite a substantial unwind there. And that's risk of like crash mode if we were to get there. Now, whether that's a temporary down and then resilient bounce back or not, like I don't know. I don't understand that market well enough, but that's the way it's sort of setting up at the moment. When it comes to rhodium, I've never actually dropped that market and built out analysis tools for it. I'm kind of intrigued, and so I probably will end up doing that. And then once I've done that, it'll be easy to create this basket that you refer to. But yeah, the relative investment prospect of platinum are pretty clear.
Vilma, I'm mindful of your time, Vilma. Do you have any thoughts regarding the relative relationship between palladium and platinum and what Daniel just said?
No, I think very, very profound observations and quite in fact true. I think that is certainly what we are seeing. We're seeing a response in a way by investors on the long-term prospects here. We are seeing palladium moving into a surplus going forward towards the latter part of this decade, and we're seeing platinum moving into a deficit after almost a decade of surplus in platinum and a decade of deficit in palladium, though the fundamentals are switching. And I think that what Daniel is seeing in terms of the investment behavior is that the investors are taking note of that and the prospects of the two. And that's the response we're seeing.
Fascinating.
Do you have a estimate of all-in cost of production for Palladium at all?
Don't have it at hand, Daniel.
It's fascinating that what Daniel sees in capital flows, because Daniel doesn't know anything about platinum, no offense, Daniel, matches what the fundamentals are from you, Vilma. Fascinating. I can't believe it. I didn't know if that was actually how it was going to work out, but I guess that's what we're seeing. Vilma, I had a fantastic time. I'm sure Daniel did too. I hope you have. Can you tell us a little bit about Metals Focus in case people want to reach out to you to learn more about platinum, or Metals Focus in general to learn about gold, silver, any other work that you do?
Absolutely. So I think Metals Focus started in 2013, and we provide data to the World Gold Council. We provide the data to the Silver Institute, and we also provide data to the World Platinum Investment Council. So we are a precious metals house. And, we produce a weekly report that anybody can subscribe to, where we cover what is topical, what is interesting in terms of platinum, palladium, rhodium, gold and silver. And then we produce our flagship reports. We produce a very comprehensive gold, silver and platinum group metals focus report. The PGM one, the platinum group metals one, we're launching in person on the 16th of May here in London. So hopefully we'll get back to a world of normal, a normalized world where we are able to have our in-person launch. And then we also do bespoke assessments. We supply our clients with a forecast, a 5-year forecast and 10-year forecast, or we would do particular research on a particular topic. We also produce a hydrogen economy report where we look at the demand for all the metals. So we didn't talk about ruthenium and iridium, but those are all key metals that's also of interest in the hydrogen economy. So we unpack the potential for the hydrogen economy, what is driving it, what is the potential for platinum group metals in that segment.
Well, let me add my recommendation for the audience that's interested. I've seen these reports and they're fantastic. I think they're very good, high quality. And those books that you produce each year, outstanding.
Thank you.
Outstanding. Daniel, any final thoughts?
No, I think this has been great. Wilma is very good at what she does, I can tell. And yeah, this is an area that I'd love to actually spend a lot more time in, because I think the opportunity is there. The setup seems to be there. Fascinating stuff.
Well, thank you again, Vilma.
Thank you. It was fun. Thank you so much. Nice to meet you, Daniel. And thank you, Emil.